Hi guys, welcome to Gold Price Daily Analysis. Today is Wednesday, 10th of April 2019. This video is brought to you by the coach. Remember always, our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. If you are new to Gold Price Daily Analysis, and in order for you to get the best of this video, we do urge you to watch our last videos. We are going to start our core analysis as usual after a quick recap. We have been waiting for important economic data to be released from the United States, and we are going to start with the JOLTS job openings for February. With high importance came below forecasts, and for the Red Book month to month came in line with forecasts, and the Red Book year to year came above forecasts, both with low importance. For the gold response to the released data, we haven't seen a significant response from gold when data was released. All what we can say that the gold made it to 1,306 before the data was released, and that was because of the tension between the United States and the European Union on the trade conflict. Also, gold benefited of a limited sell-off took place in the major US indices, which helped the gold to stand the rebounding US dollar. Moving on to the strategy recap, we said if you are in a sell position, exit your sell position at a decent price and wait a break and close above 1,300 to buy and below 1,280 to sell. Also, we said if your risk tolerance is high, start buying with a stop loss of 1,270 and a target of 1,350. That's all for the strategy recap. We'll move on now to the economic calendar. On the economic calendar for Wednesday, we will start from the United Kingdom, and we will be waiting for the following economic headers to be released. We will start with the manufacturing production month to month for February, and the GDP month to month and year to year, and the trade balance excluding European Union for February, and the trade balance as all for February, all to be considered as market movers. From the European Union, we will be waiting for the deposit facility rate and the ECB interest rate decision. It's very important, and the ECB marginal lending facility. Also, all of them to be considered as market movers. Moving on to the United States, we will be waiting for the core CPI month to month and year to year for March, and the CPI month to month and year to year for March, and the FOMC meeting minutes, which is highly important. Also, all to be considered as market movers. That's all for the economic calendar. We'll move on now to the technical indicators. On the last trading session on Tuesday, we have had a trading range from 1,296 to 1,306. The numbers are rounded and the market is still open. We do expect gold spot to close above 1,303. Numbers are rounded and the market is still open. For the daily simple moving averages, for the 20 days it's 1,301, for the 50 days it's 1,308, and for the 100 days it's 1,282, and for the 200 days it's 1,250. We are above the 20 days, 100 days, 200 days daily simple moving averages, and below the 50 days daily simple moving average. For the RSI readings, the RSI for the 1 hour chart is 63 bullish, and the RSI for the 4 hours chart is 67 bullish, and the RSI for the 1 day is 54 bullish. Moving on to the supports and the resistance, for the supports, the meaningful supports is 1,300, the psychological level, and 1,290 and 1,282, the 100 days daily simple moving average. For the resistance, 1,309, 1,312, and 1,320. Those are meaningful supports and resistance. That's all for the technical indicators. We'll move on now to the strategy. For the trading strategy, the trend is neutral to bullish and the price action is positive for the second session in a row. We are below 50 days daily simple moving average and the US dollar is rebounding. We do expect the gold to close above 1,300, which is the confirmation that we have been looking for in order to enter the market as buyers. It's also important to remind you guys that tomorrow is a big day. We do expect much of volatility are scheduled to be released from different countries, from the United Kingdom and the European Union and the United States. And the most important economic hitters is the ECB interest rate decision and the FOMC minutes. FOMC minutes is expected to be extremely dovish or negative, and here are some reasons for that. First of all, we have the President of the United States, Trump, is putting extreme pressure on the Federal Reserve Bank in order to find the new tools to normalize the monetary policy, else than the interest rate. And the last readings related to any interest rate decisions is disappointing. So we might see a line about discussion of a rate cut. That's why we do expect a dovish statement, which may trigger a sell-off in the US dollar, and it's good for the gold. So our advice to you is to buy at lows and target 1,309, 1,320 and 1,346 with a stop loss of 1,288. When I give so many targets, I do advise you to get rid of most of the quantity you bought at the first or the second target, and keep like 25% of the quantity you bought to close it at the final target. However, this is for today. That's all for today, and thank you guys for watching. Please like, share and subscribe, and I will see you tomorrow in another episode.